The impact of this concept called quantitative easing, right, where the government sort of pours in a lot of money into the economy. There's a lot of emphasis by a number of U.S. economists in terms of why that's so important. At the same time, when we see what happened in Japan in the 1990s, it didn't really solve the problem. In fact, the Japanese story is that the corporates didn't respond by to higher productivity and so on that would absorb the capacity in that sense. So, how do you think what's happening on the quantitative easing?
So, what is quantitative easing? One version of it is that the central bank issues more money,
okay,
and buys short to medium term financial assets, typically government assets. Now, to the extent that the banks are willing to sit on that money, if the short interest rate is pretty close to zero, they're willing to sit on that money and not actually spend it in terms of more credit and so on. You can inflate. You can inflate the liability side of the central bank, print more money, but it has absolutely no effect on inflation or activity because the banks are willing to accumulate as much of it as you print out. Because interest rates are zero, they don't get that much. They get some liquidity value from holding it, and that's what they do. Now, to some extent, this was the Japanese problem. The banks said, fine, we take whatever liquidity you provide, but we sit on it. We don't actually do anything with it. It accumulates on our balance sheet. Or put differently, the demand for money accompanied whatever money was being produced. And it had no inflationary effect.
Right.
Of course, this is different from a country which has strongly positive interest rates, where you print more money and people spend it more quickly because they don't want to hold the money. They want some interest-bearing security, or if they have the money, they want to use it for transaction purposes, and so this pushes up inflation.
Right.
So certainly in some countries they don't quite understand what quantitative easing means. You don't do it when you are at positive interest rates because it is inflationary.
Right.
And you don't really need inflation when you have still the capacity to cut interest rates to zero. So countries that are suffering a slowdown but have positive interest rates, the interest rate tool is what you need to use, not rather than quantitative easing. Quantitative easing comes in when your interest rates are close to zero and you have no room to cut them further. But that's also the time when banks are prepared to hold a lot of liquidity without actually spending it. So that is the real difficulty. There's a third variety which the Fed is doing right now, which is substituting for the private credit markets. That is a TALF, the kind of activity where they're substituting for the securitization market, where they're substituting for the commercial paper market by lending directly to firms. That, I think, has had effect and will have effect because it's providing credit
directly into the market.
But it gets dangerously close to becoming directed credit.
Yes.
Which means you pick your friends and.
Yes. But that's actually also what happened in Japan. The government became the driver of credit, of opportunity, and of debt as well.
And that, as I said, if you think of a recession as being a way for the market to determine winners and losers, and cut short the losers and fund the winners. The danger is with a directed credit program, you fund those who you think deserve to win, sometimes who are the well-connected, and as a result you get an economy which is much less capable of growth once you come out of this than if you let the market sort of do the choosing.
Right. One question I've always wanted to ask you is, are we calculating GDP correctly for the global economy as it is today, given how productivity features strongly in it, given how the role of China and the destruction of manufacturing prices features strongly in it? Is there something wrong with the way we look at GDP today?
There have always been criticisms of GDP, and you know them as well as I do. There's probably something wrong with the way we calculate GDP, but most other ways become quite messy. For example, should we calculate the externalities as a result of production? So China, if it makes an additional car, but at the same time there's more pollution, should we calculate the cost to the Chinese people of the more greater production and deduct it from the benefit from the car. So some sort of green accounting. But how do you implement that in a careful way? Similarly, I mean, the day a woman or a man moves from housework to paid employment as a house worker somewhere else, GDP goes up. If we both have spouses, and instead of working at, my spouse working in my house and your spouse working at your house, they both exchange and we pay them, GDP goes up even though the same work is being done.
Right.
So monetization of activity
Yes.
increases GDP,
Right.
even though it doesn't necessarily increase the actual production. So these are the kinds of issues I think we don't have a good handle on, and we need to.
It is evolving, and it will be interesting to see what we're missing out on that front. For the sake of simplicity, tell us a little bit of what you like to see happening in China and India in order to generate positive growth in the next 2 years or so.
I think they have different challenges.
Yeah.
Certainly in China, it's the medium-term issues of reorienting growth from the export-led growth of the past to more of a domestic demand-led growth. And I think energizing consumption in China is a really important issue. And I think the government understands this. I mean, I think the growth, again, that's being spurred right now is more investment. There are questions being raised about the quality of the investment and can that be improved. But I think also China would benefit if its households consume more.
Right.
I think the numbers, even though they're probably understated, are really alarmingly low, even for an emerging market. For India, the challenge is given that fiscal and monetary policy are both at near limits, how does it energize growth going forward, especially if the global economy remains weak? And I think the answer there is the reform process has to accelerate.
Right.
And so more needs to be done.
Yeah, I've heard you say this, that you like to see household growth in China coming out strongly. But doesn't that threaten the very formula as it exists today?
But the formula is not going to work that much longer, and that's why I think it needs to be threatened.
It will be a very different country, almost.
But it's a country that they actually want to be different, right? So the Chinese authorities, I think, fully understand that the coastal areas have grown much faster, much more strongly than the interior provinces. And that's causing some amount of social tension. I don't think you can directly sort of ascribe what happened in Tibet or amongst the Muslim populations to that, but it's sort of, I think, related to the issue that you want uniform development. Otherwise, people feel that they're left behind. When it combines with other volatile issues like ethnic identity and so on, that creates even more problems. But even the being left behind itself creates issues. So I think they understand they need to push growth, and President Hu Jintao's harmonious society is sort of a way of saying this. But that implies that they have to move away from the export-led growth, which is more coastal focused, to more domestic demand where the interior provinces can step up and play a much bigger role. And domestic demand means what? I mean, consumption and investment. Investment, yes, more investment in the interior areas, but also more consumption. Consumption means that the households have to be feeling rich enough to consume. There have been a number of interesting ideas suggested here, but one idea that this comes from a Chinese academic is, make them feel wealthier by giving them more shares.
Right.
And some sort of voucher privatization in China. I think they did a little bit of this by putting more shares in the pension funds, transferring shares from the government to the pension funds, that people would feel richer. Some measures of that sort might be useful.
Right.